Let's check in with the money desk. I've got Melissa Ngalonkulu with us. So, Melissa, I see Fitch has reviewed our credit rating. A lot of politicians have said that we shouldn't care about these ratings, but explain to us why we should.
Well, Maseko, it is very important to care because should the country need to actually borrow money, that would mean that the interest rates would be higher. So these ratings basically tell us how creditworthy is the country at this point. So just to go on to today's story and what actually came out from Fitch, I just want to say that ratings agency Fitch has maintained that South Africa's credit outlook is stable, but the country remains 3 notches deep in non-investment grade. Fitch noted improvements in the country's current account deficit, partly due to higher commodity exports. But the ratings agency warns that the country's debt will continue to rise and economic growth is not adequately supported. Government has responded by saying it will continue to narrow the budget deficit to enable long-term growth. Unfavorable credit ratings do lead to a higher cost of borrowing. Analysts say the weakening rand is raising the stakes for another petrol price hike next month. The local currency is now just 10 cents short of 17 rand to the US dollar. The rand continues to slump as investors race to a stronger US dollar for safety amid concerns of a global recession. One analyst says, while power cuts are not the chief reason for the rand's weakness, it does hurt its recovery.
The oil price has come down meaningfully. And if the rand was at the level that existed just 2 weeks ago, we would be talking about a petrol price reduction. And we would be saying, well, we passed the worst of the petrol price increases. Unfortunately, we can't say that now because we've got now the currency under significant pressure, and that's going to now keep our fuel price under pressure itself. Then in addition, obviously, we're going to be importing more goods, especially in the second half of the year as we stock up for the end of the year season. And a lot of those goods are going to start to cost us a lot more. And there is evidence of imported inflation starting to pick up in this country.